Hey guys, Don Durrett, Gold Stock Data. Um, Yesterday, the day before, I did um, developer 10 baggers, I think. Yeah, developer 10 baggers. And I haven't done producers. These are basically producer 10 baggers, and some five baggers, five plus baggers. But I think the best risk reward is in the producers, and the second best is in the developers. And the reason why is because if you're a producer, all you really need is higher gold or silver prices, and your free cash flow goes up, and then your multiple expansion or your free cash flow multiple expands as your cash flow increases, as your balance sheet improves. And then you could do an acquisition, you could expand production on your existing mine. But the risk reward of producer is just it, it it's just I think superior to the other possible investments. But and the one thing you really want to look for is a undervalued producer that's growing production. Now we're not trying to make money over 12 months. We don't care about the next 12 months. Um, we're really looking 24, 36, 48 months, a longer stretch of period for these producers so that they have an opportunity to improve their balance sheets, expand production, get that multiple expansion, and get that 5-10 bagger. All right. So you're not going to get a 10 bagger in 1 year. Um, then the developers, which I just went over, those have much more higher risk because so many things can go wrong between now and when you get into production. And I always say they tend to break your heart, but you can make a lot of money on developer stories if they work out. You get a really good entry point, and then they make it to first production, and then well, I always say you make your most of your money on the second mine. So they have to stay intact, and then they have to build that second mine, and that doesn't happen overnight. That's 3, 4, 5 years. Um, so it's long-term investing. Um, so we're gonna go over producers. I, it's another 1 hour video. I don't know if they're all gonna fit. We might have to do part two. One thing I want to say is I'm gonna share my screen now. Okay. One thing I would ask you guys, people haven't been subscribing to my YouTube channel. I get more people watching my videos than subscribers. It's supposed to be the other way around. So if you're not a subscriber, subscribe to my YouTube channel so I can build it up a little bit. I like to get it to 10,000. It's about 6,500. Okay, so here is the 61 stocks. Um, so currently are alphabetical. The If we sort them, these are the blues are top picks. Um, you guys should know this, but now there's probably a few people that are watching this that don't know. The way that I do the blues and the greens are five baggers at $5,000 that have strong risk reward, and the fours are five baggers, but the risk reward isn't quite good enough. So they have some issues with the risk reward, but they could, with just a few improvements, turn into um, green, which is the top 25. For instance, right here, we're looking at Allied Gold and Alkane. So Alkane just acquired um, a company. Oh, gosh, I can't think of it. It starts with an M. They just acquired a project, and once that deal closes, Alkane, hopefully it's in my notes. It's not in my notes. Um, how come I can't think of it? Analyzed them a million times. Latest news, Mandalay. So once the Mandalay project gets approved, Alkane probably will turn into a top 25. So we were waiting for Alkane to build their second mine. They have a lot of gold, but it's kind of a gold. They have a gold copper and they have another gold, but the risk reward wasn't quite good enough, but it was close, and now it's probably going to turn there. So that's kind of the difference between the blue and the greens. Um, so if I scroll over, I go by free cash flow to for my ratings. So I'm going to sort this. We'll go for the least. Oh, I put the wrong company. It's not supposed to be West Dome. It's supposed to be West Gold. Show. Oh, maybe I do. Oh, maybe it is on there. I added West Gold. I wasn't sure. I guess West Dome is on there, 2.5. So I have a few. So this is my, come over here to the premium. This is my top gold producers list. So we have 61 names. I just sorted it by cash flow upside. And you can see there's a few that are 2.5s. Now let's go back over here. Cash flow. Okay, so the worst is Westcomb, which is a solid three bagger. These are all well, three bagger. These once you get past that, once you get past Westcomb, these are all really solid three baggers, like four baggers, but I call them three or fives, but very few. So you get to Dundee very quickly, which is a five bagger. Some of these are listed as 2.5s. I haven't changed them, but you can see um, this is kind of the worst of the lot, if you will, where it gets better as we go down, right? So you can see we have Newmont is almost a five bagger, four and a half bagger at 5,000, K92, four and a half. So kind of the worst. Let's go back out. So these were sorted. Now, if we look at these, so a lot of these so I have Dundee as a three, they're right at 500. Evolution's a 2.5, and Torex is a 2.5, but these actually print as five baggers. And then some of these are two and a halves, but they're very close to being fives. The only one that's really a legitimate 2.5 on this list is West Dome. These all, from there down, these could all literally be fives. Just to show you the number of producers that are cheap at $5,000 gold. A lot of them are cheap. So what we're going to do is we're going to sort by free cash flow growth rate, and we're going to look at the best ones and we're going to go down. So we have about five of them that are 20 baggers. We don't have any 30 baggers. You shouldn't really see any 30 baggers for a producer. But if they grow, they could be a 30 bagger. This is what I think they currently have. So a lot of these companies can double these numbers through exploration success and acquisitions. Um, so how do I want to do this? So work down so you can think in terms of, yeah, I'll do this that way I can click on profile. So these are all rated four. So what we're doing is we're working down the list here is that we're looking at these are the first few are like 20 baggers, then we go to 15 baggers, then we go to 10 baggers. But this is kind of the really high return stocks, which is the ones I want to talk about. And we'll see how far I go. So Lion One. Um, Lion One is really cheap here with a market cap of $100 million. It's bumped a little bit up. I I don't know. I have it on my top 25 just because the top 25 is a five bagger. And so even though it is printing as a 20 bagger, to get on the top 25, you just need to be a five bagger with a good risk reward. Now I don't have it as a B plus, I have it as a B. Um, so, anytime you see a 2.5 on downside or a B minus on quality, then there's something there. There's a bit of an issue there. You can see right here on Resolute at 2.5 and a B minus, and it's black. So Lion One, I like the stock because of the property. I think they have a lot of gold on the property, but it's just going to take them time to expand production, and it's somewhat of a high risk stock because they have low free cash flow at the moment. It's not really significant, so they could dilute us some more. They have been diluting, which has frustrated investors. Hasn't been a high performer. We're really this is really a more of a kind of a development play because it's going to take them like 3 years to expand production. But the bet here is that they can get production to say 70,000 ounces or more. And if they can, then it should do extremely well. But that's going to take like 3 years. So if we look at line one, see the performance, it hasn't really. If we look at the chart, we can see if I do 5 years, we can see it's done really, really poorly. $1.50 all the way almost to $2 here in 20. And then look at that, all the way down, 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 down. But question is this a good entry price? I Again, it definitely has risk here. But if you look at these drill holes, 88 grams over 5 meters, 27 grams over 5 meters, those are really good drill holes. And it's a big property with a lot of targets. So it's just going to take them time. I mean, we're hoping for 50,000 ounces in 26, and I think they're going to miss. I don't think they'll get there, but maybe we get to 40,000 in 26, but we don't. What we need like 70,000 ounces, 80,000 ounces to really for this stock to really work. But they're sitting on 2.5 million ounces, but I think this thing's going to double. I really do. And I'm valuing them at only 2.5 million ounces, 80,000 ounce producer. So I kept mentioning 70. So at 80, we got a 25 bagger, but at 70, we got, 15 bagger or better. So I think it's a pretty good spec bet. Let's just leave it at that. Talisker. Um, Talisker, a lot of people really like this stock. I do too. Yeah. By the way, if I don't own one of these stocks, I'll tell you. Let's put it that way. Talisker is not on the top 25. It's a top pick, but the reason why it's not on the top 25 is because right now they're kind of in the make or break mode. The market cap is 62. They're in the make or break mode where they have to ramp up production and show that they can make money and show that they can expand production. A lot of people that have looked at this stock, I know Bill Powers absolutely loves it, would probably have this a green. This one could easily, and many people would say, wait a minute, Don, this is a better stock than Line One. This one should definitely be a green here. And they have a good argument. Maybe it could be. I've been a little patient with it. Um, it's hard for me to really make an argument why I have it as blue and line one, especially when they're right next to each other. But I think it might have something to do with Talisker. I don't think they have a PEA, which adds some risk. They just, they're starting, they just, I don't think they do. They might. And I think that's one of the reasons why. Um, Yeah, they're looking at producing a PEA. So they haven't done a PEA. That adds risk. They're just they're often mining here. So taking a little bit of a risk. Usually you want companies to do a PEA and get a good handle on it, but it looks like they're going to do one. I talked to the CEO recently, and I was impressed. That's not the CEO. And so big property, 35,000 acres with a lot of targets, 1.7. They have the goods. It's a matter of ramping it up. They think they're going to find more. Um, so I think I do like Talisker better than Lion One. I think Lion One is more it's more sexy, if you will. I mean, because Lion One could be a really big deposit. Um, it could be 10 million ounce maybe. I mean, it's got that kind of potential. It could get really, really exciting. I think it has more upside potential, but Talisker risk reward looks stronger. So it should be green, right? Okay, next one is Sorado. So Sorado, they just started mining. So it's blue because the mine life in Argentina is kind of an unknown, but they just started mining underground and they think that they're going to be able to expand the mine life underground, um, which is exciting. Pretty cheap, 73 million. And they just acquired Ascendant and that deal closed. And so Ascendant, they have a property in Portugal, and that property has exploration potential too. And so Sorado and Sorado is very cheap. So these three stocks here at the top are all kind of a speculator producers, but they're all potential growth stories, which I always like. And so, again, these top five or so, seven, six, seven are all 20 baggers. Okay, so then we have Jaguar. Jaguar has been beat up because they had a slip, but now I think that's going to be resolved. But there's definitely some risk there because they haven't resolved it yet. Getting that it's a, I think it's yeah, I think it's a tailings uh, stack that it slipped. So once they get that resolved, then the risk will be removed. One reason why I like Jaguar is because they have two mills that are only halfway used, half utilized, and they're finding high grade gold on their properties where they can basically utilize both of those mills. Very low capex. All you have to do is move the ore to these mills. So I see Jaguar as a growth story, and I think it's once they get that resolved, I think they'll resolve it in Q4. Look for Jaguar to, bump, I would say 50%, and it'll go to 300 million. But I think this is a billion-dollar company, but it's billion plus, so it's 207, and it's printing as a what, 15 bag or so. Borealis, this one is a lot more risky. They restarted a mine. They just restarted a mine in Nevada, and I don't. I bought it when it was really cheap, and now it's up to 75 million. And uh, Tony McCooch is involved in it, which I liked. I think they have a fairly good team, but anything McCooch is involved with, I thought, wow, he's involved. I mean, he must like the property. He's got a full plate, and so I like that. Um, and so yeah, it's it's definitely not a slam dunk. I don't know. The thing that worries me a little bit about Borealis is exploration potential. But when you can get a producer in Nevada for 75 million, that's pretty interesting. So it has they had 330,000 tons stockpiled, and so they're mining it right now. And then, so they have a mill, but the historical resources is 1.7 million ounces of 1.2. That's a pretty good size resource, so that they can mine that at 100,000 ounces a year. And so Tony McCooch is the chairman. So at 15,000 acres, And we have some pretty good drill holes, actually really good. 67 meters of 16 grams. And so uh, I think if they produce 80,000 ounces a year in Nevada, I have that 256 million ounces free cash flow versus their current market cap of 75. So it was, if I can find a 10 bagger, 10 plus bagger, um, then that to me is very interesting. But I don't consider Borealis as a real super exciting stock, if you will. Um, I don't see much of a pipeline. So the next one is Heliostar, and Heliostar is definitely very exciting because they have a really strong pipeline. Their Anapola project is gonna is should be worth just that project alone should be worth $1 billion, and they're at 258. And they have three other projects, plus they have another drill story in Alaska. And so, I have this one fairly highly rated because they're only producing, I think, 30,000 ounces this year, but it's a growth story. So this one is more. So these stocks at the top are all kind of growth stories. That's the reason why they're so cheap. So top 25 with a B plus. If we go look at it, so this was an exploration company, maybe developer, but they were drilling up in Alaska this Unga project, 400,000 ounces of 14 grams, which they still have, which has a lot of really nice drill targets. And then they pivoted and they acquired this Anapola project from Argonaut, 1.5 million ounces at 5 grams underground project, which they're advancing now, and it's growing in size. And then they acquired all of Argonaut's additional properties, three additional projects. So when you combine them, these three plus Anapola, they kind of turned into Argonaut. But with $5,000 gold prices, their projects become very valuable. So, and they also have another project called San Antonio, which San Antonio has 1.7 million if they can get it permitted. So that one's going to be tough, but we get this one for free. So we have five potential mines. Um, and we'll see how they execute. But on the whole, strong insiders 30%, and so decent balance sheet, 26 million, no debt in their producer. That's positive. So I have them at 4.5 million ounces, currently only producing 35,000. But this is all for them. We're looking long term, so all we want them to do is generate cash. But I have them growing to 250. They might get to 300,000. So at 250, it prints as an 18 bagger. Look at this free cash flow, 600 million potentially after they build some mines. So this is, I like, I like growth stories. So they're currently generating about 25 million ounces of cash. Not a lot, but it doesn't matter. They're using that cash to advance these other projects and to grow production. So um, um, coming out of Beaver Creek last year, Heliostar was my top pick at the conference. It's because I really like those growth stories. A Resolute, you can see I have it, not highly rated, 2.5 B minus. This is a West African story, but 800 million, so they're fairly good size mid tier. But everything has to kind of work for it. It's a higher risk stock. Galliano is another one in West Africa um, that has a lot of upside. Their costs are coming down over the next 3 years. One of the reasons why I like it. Alkane, they just did the Mandalay deal. I think that's going to improve the company. Alkane, it's in Australia, AX company, but it's looking better. Integra, um, it seems like I was talking about Integra recently, but I didn't think I've done the producers um, in a while. But there's a few new producers on this list that I wanted to talk about. So Integra, they bought the Florida Canyon project in Nevada, and they're using that as leverage to build their other project in Idaho. So this is one, it's more of a longer term. So that's why it's four, because we have to wait until they get that second project built. So it's kind of more of a developer than a producer, because that flagship project is where we're going to make our money. So, so Florida Canyon, 70,000 ounces, is kind of a high cost mine, but De La Mar is the one that we want them to build. Now, to producer, the odds are they will build it, and we have insiders at 20%, not high, not quite high enough to get excited. Decent balance sheet, like 10 million in debt, plenty of cash to advance De La Mar. So we're waiting for permits on Delamar, but once they get that project up and built, it's definitely going to be an exciting stock. So it's a 5 million ounce project, zero point 0.7 grams silver and gold. Um, that's a lot of gold, and so paying 280 for a big project. So we're looking at 250,000 ounce producer with Delamar. That's 750 million free cash flow. They're currently at 280. Um, that's pretty exciting. So it's printed as a 15 bagger. So Integra is definitely interesting. Cintara, it's amazing that Cintara is this high on the list. Um, so Cintara is a producer in in Canada and also in Turkey. And investors, I guess they don't like their Turkey mines. SSR Mine has, they have a mine in Turkey as well, the one that they're trying to restart, and investors didn't have any problem with that. But for some reason, they used to be in the Russian satellite, Kyrgyzstan, but then they lost that mine. But as far as I'm concerned, it was actually turned out positive for them because it forced them to you know mine more, to have two mines in Canada. And so you have 190,000 ounces in Canada, 200,000 in Turkey, which somewhat diversified, but they generate a ton of cash. The balance sheet, 625 million in cash, no debt. Pay a dividend. Um, Look at their margins, $1,600 margin producing 290,000. And you saw their 600 million in cash, right? And they're growing production to 500,000 ounces. And they have 10 million ounces. So they currently have 12, 11 million indicated. I'm using 10 million. Um, so where's their growth? They have two, they're going to add 200,000 ounces. I didn't really want to go to company's website. It would slow us down a little bit. Might have to. Okay, for this one, we're going to have to go to their website because I want to see where that growth's coming from. And it's not, I didn't mention it. There's presentations. Let's go find their growth. Okay, so 25 Goldfield project, Thompson Creek, Chemist, 25 guidance. Well, that's clear as mud. Chemist. Oh, it's Chemist. Targeting production of 250,000 at Chemist. So this is their mine. PEA expected by the end of this year. So let's take a look at Chemist. So they got the Oscut, Mount Mulligan, PEA expected. Here you can see their dividend yield, 3%. That cash balance they are. See if we can get guidance for chemists, but we don't know how long it's going to take them to permit the project. They own 10% of Thesis, which is interesting. Okay, 5 million ounce project. Care and maintenance. Refurbishing. Has several permits in place. This looks like a restart operation. It is a restart. They have a mill already. Okay, so Cintara looks pretty solid. And so it's amazing that it's this cheap. Um, so look at this. This is amazing. This is what it's currently trading at. 3.3 free cash flow multiple. 3.3. Why? I've seen this a lot. These stocks just get mispriced. It should be double. It literally should be double that. It should be at least 6.5, 7, 8, 8. Let's call it 8. It should be 8. I mean, look at his balance sheet. Look at his free cash flow. Um, it's it's this one is just totally mispriced. Okay, Thor. Um, so remember, I said I would tell you if I didn't own any stocks, right? I haven't. So far, I own them all, right? And I recently added Thor because it's just too cheap. These stocks at the top, um, when if a stock just is exceedingly cheap, because I don't know who the winners are, so I want to own as many mid-tier producers I get my hands on. But Thor, um, it's not green because they have to build a mine, and both of their projects are in West Africa. One of them is in Nigeria, and the other one is in Cody. And the one they're building is in Cody. So once they get the Cody one built, this thing could turn green, probably will. Um, but I've had my eye on Thor, and a lot of people really like this stock, and for good reason. So they began producing in 21 at Segovia. So it's 500,000 open pit at 4 grams, also with an underground, but that's very high grade for an open pit, generating a lot of free cash flow. Um, and it has a 5-year mine life, but then they're going to go underground. CapEx very low, almost paid off, 87. So they've proven that they're good mine builders, good operators. And now they're going and they're doing a second mine. Remember, I saw you make your money on the second mine. It's 1.8 million ounces at 1.2, growing in size. Oh, it's in Senegal. I think I said it's Cody. I'm okay with Senegal. I'm okay with Cody. So, um, so let's look. Balance sheet is okay. Not a lot of debt. 3 million ounces growing, currently at 90,000 ounces. I have them going to 150. So if they get to 150,000 ounces, that gives them 500 million in free cash flow. They're currently at 375. So they're kind of tight. So I only have it as a 12 bagger. So now we're off the 15 baggers. We're down to 12s. But It's cheap enough for me. Um, you might not like West Africa. Aerys. So Aerys is similar to Cintara in that it's mispriced. Aerys should not be a 10 bagger. It has too much quality. It's got a market cap of $1.5 billion and it's printed as a 10 bagger. That's totally mispriced. That was an A minus. You shouldn't see too many A minuses of four. Actually, we have a few more, but printing is kind of a solid 10 bagger. The reason why it's mispriced is because they're expanding production this year at Segovia and adding 50% increase in production. And then Marmont is going to come on production next year. Marmato comes on next year at 100, ramping up to 160,000. I think they're about 30 now. In 26 in Q3. So we're a little over a year away from that, but it's not priced in. And the expanded production at Segovia, adding 50,000, going from 200,000 to 300,000, isn't priced in. It's like the markets are ignoring this growth. So they go to 460. They go next year in Q3. They go to 300,000 in a few months, and then they go to 460. So this is going to be a 460 producer in a little over a year from now. And the market's like, oh, we'll wait until they do it, and then we'll value it. So I mean, if we go down and we look at their the free cash flow, they're trading at a 4 multiple today, and production's getting ready to rip higher. Um, so that multiple is going lower. A lot lower if the gold price just stays the same and the margins don't go up. And they've never really had a cost problem down there. I've followed this company for 10 years. Their costs have always been fairly solid, if you will. Um, Never been a high cost mine. So yeah, I mean it's mispriced. So I have them now that's at 250, but they're going to 460 next year. So I only have from 460, I'm only adding another 100,000 ounces. And that's Toro Peru, which should add 200,000. So this 550 is actually very conservative, and I'm not even giving them any value at all for their additional mine in Colombia. Zero value because they're having trouble. So Toro Peru, I'm only giving them 100,000. They should do 200, and then Soto Norte, I don't know if they're going to be able to get that permitted. I'm giving them zero value for that. So that's just an option, but this stock is mispriced. Aerys and Cintara mispriced. Allied Gold. Allied is in Africa and what they're West Africa, East Africa. They're diversified. A lot of people are gonna pass on it, but they have a strong management team. They know how to build mines, build them fast. They remind me a lot of Perseus. Um, I would rank them third, West African miners. Endeavor first, Perseus second, Allied third, and West African fourth. But Allied, they know how to build mines. They can build them fairly quickly, um, and they're kind of a growth story. They're a shark, but if you don't mind Africa, I don't like Southern Africa. Don't like Central that much. But Allied, they're mainly in West Africa, but it's a big company, 1.6 billion market cap. It's basically a large mid-tier, but growth story with a lot of free cash flow. So I'm have it as a top 25 with a B plus. It's kind of a it's kind of a Perseus, but a cheap Perseus, if you will. It's kind of way I look at it. Mineros Alamos. Okay, so this is the first one on this list that I don't own. And the reason why is because the resources are low, but it's very, very cheap. It could easily, they do have a good management team, but the problem is for me is the resources. I just don't think the resources are big enough. They're a small producer. They're probably the only small producer on this list, but I have to put them on here because they're very, very cheap. Market cap of 146, and they I'm putting them on here because they have a pretty good management team and they probably be able to pull it off. But I don't own it because of the resources. Step Gold. Interesting story, Mongolia. They did a merger. Now they have to prove to us that they can execute. Um, and if they do, I have them as a B minus, but this thing could definitely go to B, B plus very, very quickly with execution. So the next 12 months is really going to kind of tell the story here for them. They're, they're, I think they're also growing production, but no, it's very highly undervalued. I think if you don't mind Mongolia, I think Step is pretty interesting. Orezone, very cheap. I could you could make an argument that Orezone's mispriced as well. They're in West Africa. I think they're in Ghana. Um, Top 25, high rated. They're in Burkina Faso, and we don't like Burkina Faso. So a lot of you go, no, no, no. I mean, it's a military junta. How in the world, Don, do you have a Burkina Faso stock on your top 25 list? I like the property. What can I say? I like the property. It's they haven't drilled this thing has been drilled like down to like 100 meters and it's got all kinds of they haven't even tried to drill below that. I mean, and there's gold below. So it's just a lot of targets. So the key, they do have the insiders but I don't think anybody's going to be acquiring any mines in Burkina Faso. Burkina's probably going to keep um, increasing taxes and squeezing them. They have 5 million ounces, but this thing's growing in size. So it's going to be low cost. So right now they have $1,400 margins, 120,000 ounces. It's going to grow to 200,000 very soon. And then I think this is a 300,000 ounce property. So I'm valuing at 220, but I think it's going to 300. And they're currently here. What do I mean by the misprice is valued at a 3 multiple. Um, and it's a really I've said it's a nice property twice, so I can't. But you know, I like 10 bagger producers that are growing. But for me to put a Burkina Faso on the top 25, it's a bit of a stretch, right? Maybe not though. Mako. I don't own Mako. So Mako just did another acquisition. A lot of people like Mako because it's cheap. That's why it prints as a 10 bagger. I do have it a two pick. I put it as a B plus um, because they're generating free cash flow and they just did an they're a shark. I mean, Mako's a shark, right? They just did an acquisition to grow production. So, they continue growing, but I don't own it. I've followed the company, just haven't really been excited about the company, but I could be wrong. They could do well. Mineros S.A. Um, one of the reasons why I did this um, video today was to discuss Mineros S.A. I bought it this week, and the reason why is because I talked to the new management team. So an investor, I just did not like the management team, and so I never owned it. And then I found out, and I talked to, he's not the CEO of the company. He's the founder of the investing group. So they're called Sun Valley Investments. This is wrong. It says 55. It's actually 65. And so they took over 65 and they put on Mineros. No, they put three board members on on Now they have three board members, so they're kind of in control, and they put a new CEO in place. Is this? Yeah, this is Mineros. Okay, so they're currently mining 205,000, 210, 215, and they're going to grow production. Um, they already have a plan to grow production in Nicaragua. So this is a growth story. Plus, they're in Colombia, so they have two producing areas, and they're both large. It's Panama Pioneer and Nicaragua, and it's growing in size. And then it's kind of a district, and then they have another district size in Colombia that they're going to focus on. But their goal is to reach 500,000 ounces, and it's always been an undervalued stock. So. It's been high dividend. It's all been a high dividend stock. So at 215, they have $1,200 margins, but I'm only valuing them at 300,000, which they actually have 350. They expect to grow to 350 just based on existing resources. So they have 5 million ounces, but they have a plan. They're working on it now with this new management team. But this is what I mean by cheap. It's printing as a 2 multiple. This thing could easily go to a 10. So you get 5x expansion. I have as a 10 bagger. So if if you can find a mid-tier producer, 550, 10 bagger, those are what I look for. I would love to find cheap producers. This is cheap with growth, right? With growth potential. I think this thing's going to go 350, 400. Maybe they hit their target of 500. But now that they have a stronger management team, this one's kind of under the radar, I think. So this Sun Valley Investments they just basically came in. I don't think anybody really even knows that this is kind of taking place here. And they're kind of revamping this whole company, changing the culture to more efficient operations and growth and more focused on growth. I was talking to Vic, one of the founders of Sun Valley, and he told me that he asked them, when they were going to update the resource and the old culture. They said, "Well, we only do that annually." It's like, wait, you have, and so the resource right now, right? The resource is at 5 million, and they've been doing drilling. It's actually bigger than this, and they're in no rush to tell the world. They're like, wait a minute, you got another million ounces? Why don't you send out a news release? And they already know it. They're like, but we don't need to tell. We only tell people annually, you know. So he's changing the whole culture. They're like really laid back, really easygoing. Um, so uh, Mineros under the radar, mispriced like Aerys and Cintara. So those three projects, I love it when you can get these mispriced stocks. So yeah, so I recently bought Mineros S.A. I think this thing looks fabulous. I'm excited about its potential. West Gold. West Gold is it's unbelievable. So we got Gold, Equinox, Vault. These three stocks all printed as a 10 baggers. Now, the only reason why Equinox is not green here, it should be green, is because they have high cost. And we want them to, I think they have an $1,800 ASIC, 1850. One more quarter, um, and it should be a green. This is another one. I mean, we talked about Talisker. Don, how can you say that Equinox is not a top 25 stock? Um, and you make a real good argument. It probably should be, but I want to see. Um, yeah, I think I'm only going to do the fours, and I might do a part two and do these five baggers, 5+ baggers, and here. I might wait and do it next week. But let's go take a look at Equinox's margins right now. Look at their balance sheet. Okay, so their debt, 1.3 billion, which is pretty high. And then if we look at their margins, $1,000, that's pretty good. I have their ASIC at 1850, and I have the 1,000, which is that's plenty of free cash flow, Don. I got the train at 6. Okay, guess what? We're that one. I'm gonna go back. We're going to we're gonna go to Talisker. We're gonna change them both. So we're gonna change Talisker to a top 25, and we're gonna change Equinox to a top 25. A lot of these stocks, I'm waiting. They're top picks and they're not top 25s because I'm waiting for them to advance to where I feel comfortable that they're have a good strong risk reward. So when I look and I see Equinox, um, I see Equinox with $1,000 margins, um, and trading at a 6. I basically I say that they're generating 200 million in free cash flow every quarter at this current gold price. That's plenty of money to pay that debt. And um, so we're doing that. Okay, so Westgold, um, Westgold and Vault are and Regis. Those are my three favorite West or Australian mid tiers. And it is crazy that my favorites are 10 baggers. It's I mean it's kind of nuts. I mean I really like their properties, their management teams, their balance sheets. They're kind of twins. All of these companies. You can see their market caps are 1.5, 1.8. Equinox, now that they did that deal with Caliber, they got what, 10 producing properties, 8. Okay, maybe a little high. They have at least 6 though, probably 8 producing properties, well diversified, all in I know North America and Mexico. I don't know if Equinox has any um, calibers in Nicaragua as well, but I don't think they have anything in yeah, they do. They have Brazil as well. So they're in the Americas though, and South America, Central America, and North America. But I think Equinox looks really, really good. So Westgold. So this Westgold and Vault, very similar stories. So if we look at them, I mean, if we look at their balance sheet, 150 and 32. So strong balance sheet, strong margins, $1,200 margins, strong growth. So we look at Vault. I mean, what in the heck are these Australian stocks doing trading at a 4.5 multiple? Um, these the location is way too good. They're in Western Australia, which is the best place to mine in the world. They should be getting a premium. Not they're not should be they shouldn't be getting knocked down. They should be getting a premium. They have 1,000 plus margins and they're trading at a 4.5 multiple. Plus their growth story going from 330 to 350. Now this 10 bagger is predicated on growth. So, maybe you hold it for 4 years and they grow the production and you know, maybe you don't get the 10 bagger, maybe you only get 6, 7, 8 bagger per se. But I'm a big fan. I just think you're getting a lot of value for so you can see this one is I don't it's probably trading it's red, so it's probably trading in the pinks. So a lot of these Australian stocks, it's amazing. They do not support North America. Let's just go and check and see what's trading in the pinks. It probably is. Pink, look at there. That's hilarious. So they don't care about North America. This is a 1.5 billion company and they don't care about North America. They just trade in Australia. It's hilarious. I find it hilarious. It's like, You don't care. It's like, yeah, we don't care about retail. We get enough institutional money. We don't care about retail. Unbelievable, huh? So it's- I think I didn't take a look at Vault. Yeah, we were at Vault. So this is the one that's trading the pinks. Um, you don't want to buy in the pinks, by the way. You want to, if they're trading the pinks, you have to buy them in Australia. Okay, so here we're at Vault again. Better balance sheet, 400 million, no debt. Margins of $1,200, 400,000, growing to 500,000, 12 million ounces of gold, trading, mining in Western Australia, um, trading at a 4 multiple, 3.7, 3.67, 10 bagger upside. Remember I said, Vault, and this used to be called Red 5, and they renamed their company to Vault. Um, just amazing that these companies are this cheap, kind of mind blowing. So we're going to end it there. Those are all the, oh, I'm not done. I have some more tens. I had two more. Okay, so I have two more here. So we'll do them real quickly. West African Resources, I have them ranked fourth in as far as quality mid tiers in West Africa. They are a shark. They like to grow through acquisitions, but you have that West African risk. But I do have it as a top 25. So I got Allied as a top 25 and West African as a top 25. But you have that risk. Some of you will pass on it. But I like to load up on the mid tiers. I always say that West Africa is going to bite me eventually. Pantero. So Pantero, you know, I don't have them on the top 25. They're a mid-tier producer. These guys are close to making it to the Aussie 8 list. They're almost to a billion. They're at 800,000. Um, if they can get green, get to a billion, it's not much of a jump, 20% move and they'll be a billion dollar company. But I like Pantero better and better every time I look at it. We got one more down here at four. We got I-80, but this is more of a development story. They got to build four mines. Let's go look at Pantero. This will be our last mine. Um, I do like it. So remember, I said I'll tell you if I don't own it. So Pantero, I followed this stock, followed it, didn't own it, and then finally I said they started advancing, and now I like it. I like it a lot. Their property has a lot of potential. So they're producing around 100,000. Norseman has 2 million ounces underground and 2 million open pit. So we're looking at 4 million ounces, which isn't a lot for a billion dollar company, billion dollar mid tier, but they have a big property, 200,000 ounces with a lot of drill targets. So that's one of the reasons why, um, I have it at blue because, for a billion dollar company, we need, 100,000 ounce producer. They're not quite big enough yet, 80, but they have a good balance sheet, 85. So they can drill aggressively. The key to them, they're at 5 million ounces, but they're only a 90,000 ounce producer. So they're not quite there yet, but I think they can get there. They have really good margins, $1,300. And I think they can get to become a 200,000 ounce producer, but how long is it going to take them? Until they get to that 200,000 mark, it's a bit of a stretch to be, an Aussie 8. And I want them to get on that Aussie 8 list. They're printing at almost a 7, which is interesting, right? These guys are valued more than their, you know, than Vault or West Gold, which is kind of crazy, right? Why is these guys valued higher? Um, but I have it printing as a 10 bagger if they can grow. But I like Pantero. I mean, it is a little pricey for 190,000 ounce producer at 822, but it's printing. They generate a lot of free cash flow with that 90,000. So, and it's a growth story. They have a lot of drill targets. So, um, yeah, I am glad I own it. So we'll end it there, and maybe I'll go back next week and do a part two and we'll just do the quality 5+ baggers.